Hi everyone, welcome to Tradeschool YouTube channel, place to sharpen your knowledge. Come on, let's go to the topic. Our topic is basic trading strategy, moving average crossover. A basic trading strategy involves a structured approach to buying and selling assets, such as stocks, currencies, or commodities, with the goal of making a profit. Here's a simple trading strategy suitable for beginners. Objective: to identify potential trend reversals and make trading decisions based on the crossing of two moving averages. Indicators needed. Simple moving averages. You'll typically use two SMAs, one with a shorter period and one with a longer period. For example, you might use a 50-period SMA and a 200-period SMA. Trading rules. Number 1. Setup. Plot both the short-term example 50-period and long-term example 200-period SMAs on your price chart. Trading rules. Number 2. Identify the trend. When the short-term SMA is above the long-term SMA, it indicates an uptrend. When the short-term SMA is below the long-term SMA, it indicates a downtrend. Trading rules. Number 3. Entry signals. Buy signal. When the short-term SMA crosses above the long-term SMA golden cross, consider it a buy signal. This suggests that the short-term trend is turning bullish. Sell signal. When the short-term SMA crosses below the long-term SMA death cross, consider it a sell signal. This suggests that the short-term trend is turning bearish. Trading rules. Number 4. Risk management. Always use proper risk management techniques, including setting stop-loss orders to limit potential losses. Determine the size of your position based on your risk tolerance and the distance to your stop-loss level. Trading rules. Number 5. Exit strategy. Consider taking profits when the short-term SMA crosses back below the long-term SMA for long positions or when it crosses back above for short positions. Alternatively, use other technical or fundamental analysis to confirm your exit. Trading rules. Number 6. Backtesting and continuous learning. Before using this strategy with real money, backtest it on historical data to assess its performance. Continuously improve your strategy and adapt to changing market conditions. Important considerations. This strategy is a simple example and should not be used in isolation. It's essential to combine it with other forms of analysis, example, support, resistance levels, candlestick patterns, and market news to increase its effectiveness. While moving average crossovers can be effective in trending markets, they may generate false signals during choppy or ranging markets. It's crucial to understand the market environment in which you're trading. Never trade with money you cannot afford to lose. Trading involves risks, and losses are possible. Consider paper trading, simulated trading without real money to practice this strategy before applying it to a live trading account. Always remember that trading involves risk, and there are no guarantees of profit. It's essential to have a clear trading plan, follow strict risk management rules, and continuously educate yourself to become a successful trader.